Holy smokers, this ain't no dang jokers. If you care about stock market investing, you have clicked on the right video today. This is going to be one of the most action-packed videos I think I've ever done. The amount of things we have to talk about in this video that are very, very important, and important not just for stocks, but for the whole, what's going on in the market right now. This is an insane video. This is an intense video. I appreciate you guys joining me for this one here today, and I think you're going to enjoy this one, okay? I just wanted to point this out right off the top. First off, Robinhood cutting about 23% of jobs. We'll get into that in just a moment. But I just thought this was interesting. I wanted to draw this to everybody's attention. I think everybody out there should have the VIX on your watch list, which is a volatility index. It's acting a little strange. Let's just put it that way. Here's the deal. The market hasn't been doing much the last couple trading days, but yet the VIX has been making these big spikes upward. Now, usually the VIX makes a huge spike upwards if the market's in a drama time period. If maybe it's going up huge, down huge, a lot of trading activity, things like that, you'll see the VIX spike higher. But right now we're not in that sort of market. So to see the VIX spiking the past two trading days in a pretty intense way without much going on in the market, it means there's something going on a little deeper beneath the surface in the market right now that could be some, let's just call it a change in the seasons, okay? Now, here we go. First off, Robinhood cutting about 23% of jobs. I think this was vital to bring out as the first thing I actually wanted to talk about in today's video, even though this is one of the less important companies of what we're going to speak about in this video here today. But essentially, Robinhood cutting 23% of jobs. Here's the deal. This company just cut jobs a few months ago. And this is a problem for the economy, okay? Because here you are, you have some of these companies announce that they're either stopping hiring or freezing hiring. You have some of these other companies starting to do smaller layoffs. And then you've got a Robinhood situation here where they already did got job cuts. They already cut 9% of their workforce just a few months ago. Then all of a sudden now they're cutting another 23%. And that's the scary part for the jobs picture. And that's why if there's one thing I worry about in regards to the economy, it's the real estate market and jobs, right? Because as long as people have jobs, they can pay their bills, they can do stuff, right? The economy can be at least in a decent place. It might not be in a great place based upon inflation, but as long as people have jobs, at least you can afford a roof over your head, you can afford your car payment, things like that. But in a dynamic where people lose jobs, that's a dramatically bad thing, right? So Robinhood lays off 23% of the workforce. Now those people got to go try to find other jobs other places while everybody else is simultaneously either freezing hiring, right? Or in a situation where they're not, they're very reluctant to hire. And you've even heard the biggest of the big companies out there basically say, what they've said is they are only hiring the best of best moving forward now. And so, do all these people that just got cut from Robinhood, do all of them go out there and get jobs over the next month? I'm not so sure about that, to be honest. Because if you have all these other Silicon Valley companies being very reluctant with their hiring, right? Is a company like Robinhood going to get rid of their 23% of their best workforce, right? Think about this for a minute. Are they going to do that? Well, I don't know about that, right? But there's something much bigger here, okay, that's going on that I actually want to show you guys, okay? So first off, if we look at the numbers, total revenues increased 131%, but that was last year. This is looking at last year in the same exact quarter. And I bring this out to your attention because Robinhood tried to do a little finesse, let's call it that, where essentially they showed us sequential numbers quarter over quarter. I want to know year over year. So this is where their business was at this same exact time last year. Revenues increased 131%, transaction-based revenue increased 141%, monthly active users came in at 21.3 million. Okay, remember those numbers. Where there's business at now, okay? Total revenue, 318 million. Oh boy, okay? Transaction-based revenue, 202 million. Guess what, guys? That's down 50% plus year over year. 50% plus. But here's the big problem. Their monthly active users came in at 14 million. That means they have lost over 7 million plus monthly active users, okay? Most retail has sold everything and said, peace out, stock market, I'm out, okay? All those folks that came in late 2020 into early part of 2021 in the FOMO cycle and everybody was forced to be home and a lot of people looked at the stock market as like this casino game, right? Those people have pieced out of this market. They're long gone. And this is something I've known for a while because I'm as tied into the retail community as anybody, right? And have been since 2016. So I get to see like influxes of new people going in, going out, things like that. And I've already known these folks are gone, right? And some folks try to argue with me that they're still around. And I'm like, no, they're gone. They are gone. And when you look at the Robinhood numbers, you see they're gone. Monthly active users down over 7 million year over year. That's an incredible number. These people, they sold everything in the market and they're like, I'm out. And that's basically what happened. And for Robinhood, right? It's a disastrous situation because their monthly active users have just gone bye-bye, right? And now they're stuck with what they have left, and that's cool, and that's their business, but it's kind of a depressing situation as a stock when you see your monthly active users just drop. Revenue just down massively. It's not ideal. Let's just put it that way. Now, to everybody that's left in this market now at this point in time, you're the real deal Holyfield. Take a shot for yourself, okay? If I could smash your thumbs up button for you, I would smash your thumbs up button for you. So good for you guys that you're still in this market and you're going to be in here for the next 5, 10, 15, 20 years because we saw those folks weren't for real. They had no clue what they were doing. They were just gambling money around, and it was what it was. It was a moment in the market, but that moment's long gone and it ain't coming back. It will come back someday, but it ain't coming back anytime soon. I can tell you that much. I was a once in a, almost like a, I don't want to call it a once in a generation situation we had there, but that was a once in a every like 20-year situation we had there, okay? Now, in terms of Hood, stock price actually isn't down big. You think, okay, all that disaster revenue, transaction-based revenue down 50% plus, our monthly active users down over 7 million year over year. Oh my gosh, our stock price must be a devastation. They're laying off 23% of their workforce. No, it's not. Here's why. The reason Robinhood stock is not down huge after hours is because this stock has already gotten obliterated. This was an $85 stock at the peak, okay? It's a $7 billion and some change market cap here today, right? And this company has over $6 billion of cash, or somewhere around $6 billion of cash on their balance sheet, okay? Cash and cash equivalents and investments. So here we are in this situation where the company's cutting a bunch of expenses, so they're going to hopefully right-size their business now at this point in time, right? The worst is over for Robinhood in terms of people leaving the platform now at this point in time, right? So you kind of are in this situation where you're I don't want to say necessarily at the bottom, but you're pretty darn close. And so now Robinhood's in this situation where it might not be the most exciting stock moving forward, but it's hard to get that stock down in any meaningful way because now they're so focused on getting to profitability. They've cut so much of their workforce that their expenses are going to get much more in line with where it should be. And so now their business can emerge into a much healthier business over the coming years. And that's why that stock is not down 20, 30% after hours like you might think after a report like that. Because a lot of people are just, the sellers already sold, man. Most of these sellers have already sold out of Robinhood a long while ago, okay? PayPal. Complete opposite situation. PayPal's popping over 10% after hours here. As somebody that's been buying the stock for the last few months as it crashed through the floor, I am a very happy camper. Let's just put it that way. And what's going on here with PayPal? Well, 4 core things happened in this earnings release, essentially. 1, they beat revenues. 2, they beat their earnings per share. 3, they announced a $15 billion buyback. Now, that's a massive buyback because here's the deal. Today, PayPal closed at just over $100 billion market cap. So you're talking about, a $15 billion, that's like a 15% buyback there. That's pretty darn intense. Like usually when companies announce buybacks, it might be in the more like to 3 to 5% range or 1 to 3% range. 15% is a pretty intense number. So that's a massive buyback the company just announced. They also announced a new CFO, and then also Elliott, which is a big hedge fund, they have a $2 billion stake in PayPal now at this point in time. So looking at all this, PayPal's in a pretty good position. And here's the deal with PayPal. This stock got treated like it was some meme stock or something like that in terms of how far it got tore down, right? It got treated like it was some Robinhood stock. This is PayPal. This is a legit, massive, big profit machine company that's a great business model. They own PayPal. They own Venmo. It's a giant, and it's going to continue to be a giant for a long time to go in the future and just get bigger and bigger and bigger in terms of revenue, earnings per share, everything, market cap. And so, but it got treated like that, right? The stock was near $300 at one point. It got shot all the way down to $67. They threw the stock out like it was flipping flapjack and Robinhood. This ain't Robinhood, man. PayPal's not Robinhood. PayPal's not a firm. but they treated PayPal like they treated all these other, let's just call it fintech companies. And this is just one of many reasons why the stock market can be so silly, because it threw out this great company in PayPal with an unbelievable management team and all these sorts of things, right? And a great established business model that's been here for a long time and it's just getting bigger and bigger and bigger. Two of the top, usually three most popular finance-related apps on the App Store are usually PayPal and Venmo. Cash App's usually the other one, okay? Which is owned by Square, by the way. But they treated this stock like it was freaking a firm. They treated it like it was Robinhood. And that's just the worst thing they could have possibly done. It didn't make any sense. And so obviously I've been picking up shares of the stock as it crashed over the last couple months. And, PayPal's got a very bright future in front of itself. And you see it make a nice move up here after hours because people are just starting to realize, this one shouldn't have gotten thrown out the way they threw it out. Let's just put it that way. And it's moving up, okay? Next up here, AMD. Alrighty, I am about to stick up for AMD in a big way here, okay? So AMD down about 5% after hours. By the way, I do not personally have any money invested in AMD, but I gotta say, I'm pretty darn impressed, okay? So stock's down about 5% after hours. Now, there's some good and some bad in the earnings report, okay? And we got to go through this and really look at the good and look at the bad, okay? Revenue was up 70% year over year. That's incredible. Gross profit was up 65% year over year. That's incredible. Gross margin was down 140 basis points, but in this sort of market, you'll take it, okay? Operating expenses was up 151%. That's kind of like, Operating income down 37%. Operating margin down 14 percentage points there. Net income down 37% and earnings per share down 53%. So we have a divergence of exciting news year over year when it comes to revenue and gross profit, right? But then you go ahead and you look at the bottom line, and the bottom line was kind of ugly in this particular quarter. But they might be able to turn that around over the next few quarters and get that bottom line into a much, let's just call it better place, okay? So I would call it a little bit of a mixed bag when it came to kind of AMD's earnings, okay? But you know what's interesting is I see AMD with all this growth, and I would have thought that AMD must be trading at a very rich valuation. And when you actually start running the numbers, you find this company isn't trading rich at all, like not even a little rich. This company is actually very fairly valued, if not, dare I say, very undervalued right now, okay? Here's the deal with AMD. They're expected to have $4.38 of EPS this year. Now, we'll see what that number shakes in at. Could be less than that. Maybe it's only $4 or $3.50, or maybe it's more than that. Maybe it's $4.50 or $5, right? But if we just go, 31 analysts cover the stock. If we say the average there, right? You go ahead and divide it out by 94. That basically puts this company at a 21.4 2022 PE. That's not expensive at all, especially for a major growth stock like an AMD. Even if we're in a recessionary environment, that's still not expensive. So I was like, wow, that's actually not a bad value at all for this company. I was looking at this here, okay? Look at this. So 2023, 32 analysts have numbers out there. The average consensus for estimate for EPS for them in 2023 is $4.89. If you divide out those numbers, that's a 19.3 on the 23 numbers. Once again, that's not expensive for a stock like AMD. So I'm actually pretty darn impressed with not just AMD in terms of their top line and all those sorts of things, but I'm actually very impressed with AMD's valuation right now. I don't think the stock's trading rich at all at $94 a share. And it doesn't mean it won't go down to 80 or 70 or something like that. But I got to say, it's intriguing, okay? I'll leave it there. It's very intriguing. And so it's one of those stocks that actually makes me want to do more research here and run my own EPS numbers over the next few years because, yeah, it's not that, some people thought this stock was trading at like a 90 PE or something like that. No, it's not. No, and it's not factual whatsoever, okay? Buc-ee's next up here, Starbucks. Very small upward move after their earnings here, 1.6%. But Starbucks is a big company, global company. I think it's important to look at their numbers. So as far as their earnings per share came in at 84 cents adjusted versus 75 cents was expected. Revenue came in at a very slight beat. Numbers weren't a disaster considering they have a major business in China, and we know about the China lockdowns and everything that was going on there. So, I actually thought that was a pretty respectable quarter for Starbucks given a very, very tough operating environment, okay? Oh, Lee, this ain't no joke, Lee. Next up here. So, Oatly came in with revenues that were up 30% on a constant currency basis. Basically, almost all companies have this currency headwind working against them right now, but up 30% on a constant currency basis. Now, the interesting thing I thought with Oatly, and by the way, I went through Oatly in depth numbers, like I did a 17-minute video inside the private stock group here today on Oatly. Went super in depth on them there. They mentioned profitability 3 times in the first paragraph. So this company's in a situation where they're going to be very focused on profitability moving forward, their margins, their bottom line, things like that, which I think is a smart decision. And I think I look at the Chef and them, and I see 2 stocks that are kind of in the similar scenario where 3Q, 4Q, they should see margin expansion. They should see their bottom line get to a much healthier place. And this sets up Oatly and Tattooed Chef to, in my opinion, and I don't care, other people can have whatever opinion they want. I think both those stocks are going to make insane moves in 23 and 24, because what's going to end up playing out is their margins are just going to get better and better quarter after quarter, starting in 3Q, which is this upcoming quarter, right? And then going into 4Q, then going into 23, and their bottom line is going to get in a much healthier place. And they're going to still put up impressive growth rates, not the growth rates they once had, those 40, 50% type growth rates, but in the food industry, if you can grow 10 to 20%, that's amazing. And especially if you start to reach profitability. So that's why I think those stocks are going to go on just ridiculous runs for 23 and 24. Other people have other opinions. I don't care. I know what I know. I believe what I believe, and I'm putting my money where I'm going to put my money. As far as this stock goes, I'll probably be buying it over the next few days. I just wanted to kind of see the shakeout from today and tomorrow, and then I'll probably buy some more shares there, okay? SoFi, not a stock I personally own, but man, a stock I am extremely impressed with. I listened to their last earnings call. I was extremely impressed, okay? And the stock's making a nice upward move after hours, about 7.5% here with SoFi. These numbers are no jokers, okay? Record GAAP and adjusted net revenue for the second quarter of 2022. GAAP net revenue came in at $363 million. That's up 57%. $356 million record adjusted net revenue, up 50% year over year. Adjusted EBITDA came in at $20 million. That was up 81% year over year. New member adds came in at over 450,000. Quarter end total members up 69% year over year to 4.3 million. Okay. New product adds of over 702,000. Quarter end total products up 79% year over year to nearly 6.6 million. Management raises full year 2022 guidance. SoFi, I mean, I'm telling you, this is one of the very few fintech companies that went public in the past few years that I actually look at and I'm actually very excited about. I got to say, their numbers are impressive. That last conference call I listened to was impressive. I'm going to have to listen to this conference call too. So I continue to be impressed by SoFi. The numbers they're putting up, the growth rates they have, the way they're running their business model. And yeah, I don't know if it's a stock I'm going to buy, but I got to say, I'd be a liar if I didn't say I'm very, very impressed with this company. I'm very, very impressed, okay? Match Group. So if you didn't know Match Group, they basically almost have a monopoly on the apps and website dating products. Essentially, if you ever looked into like how many different companies Match owns, it's a long list of websites and apps that are most of the most popular out there. But this stock's down huge after hours, right? 22%. Now this is shocking. It just blew through its 52-week low. And this is shocking that this stock is trading at $50-something a share. And the reason being is, if you think about this, right? We're coming off of Rona. You would assume coming off of the Rona lockdowns and everything, like dating would be insane, right? And all these apps and websites and everything would be busy. Let's just call it that. Well, what we're seeing is it's not. And the numbers just aren't quite there. And so that's just almost shocking. And this is why it's so hard to bet on specific short-term scenarios, because I bet you any money, no pun intended, last year around this time, people were probably betting heavy on Match, figuring what I just said, right? People are going to be dating out there, doing more things like that, right? And so they're going to be using apps and websites like Match has almost a monopoly on this industry. But what we're finding is that's just not adding up, right? And so here you go. You could have made this short-term bet that, oh man, dating's going to go insane over the next year or two. So that means Match is going to go on this beast run. And what did you get? You didn't get a beast run. You got a beast loss, okay? And that's why it's so hard to make short-term bets on companies, right? Sales will be $790 million to $800 million in the quarter ending September, said the Dallas-based company, which is parent to dating apps including Tinder, OkCupid, Hinge, and a ton more, okay? Analysts on average estimated $883 million. Ugh. And so that's a big mess there, okay? Quote, although the overall market opportunity remains substantial, the current environment is presenting some unique trends related to consumer behavior, said the CEO. While people have generally moved past lockdowns and entered a more normal way of life, their willingness to try online dating products for the first time hasn't yet returned to pre-pandemic levels. That's interesting. You know, yeah, I mean, I don't know what else to say other than just I'm surprised. I would just say that. I'm just surprised that that's a situation. I might have to look more deeply into Match and see if there's something here. But yeah, I mean, if that stock's trading at 50-something tomorrow, I'm going to probably have to do some dig in there and see what's going on. I just want to draw your guys' attention to this because I saw Whirlpool down over almost 4.5% today. And I just thought that was an interesting move because the markets weren't down big or something like that. And when you see something like that, I think it's just something good to register that clearly there's no appetite to buy Whirlpool stock right now for that stock to make a 4.5% downward move when the markets aren't even moving down in any substantial way here today. When you look at the S&P, you look at the NASDAQ, things like that, right? I think it's just people understanding the housing market's going to be weak for some time, and therefore Whirlpool's going to be in let's just call it a soft space for the next few quarters, okay? Now, next up here, this is pretty big news. I don't know how many of you guys saw this, but Pelosi went to Taiwan, okay? Now, there's a bunch going on there, okay? And I'm not going to get into all that, but here, this is important for the markets. A giant Chinese supplier of electric vehicle batteries decided to push back announcing a multi-billion-dollar North American plant to supply Tesla and Ford Motor Company due to tensions raised by House Speaker Nancy Pelosi's trip to Taiwan. Now, China will do this. They'll use their companies to try to influence the United States or others to do certain things, right? And so this is a situation where essentially China doesn't like Pelosi going over there to Taiwan. Let's just call it what it is. And they say, okay, you want to do that? Well, we were planning on, building a multi-billion-dollar battery factory in your backyard, but now I don't know. We might not do that. We're going to pull back plans for it right now, right? And so this is just, China has such a huge influence on the business community, bigger than probably any other country. And we'll see what happens with that. What I think is interesting is when you look at the stock price reaction, it shows you how different shareholder bases are. The Tesla shareholder base has gotten so used to ignoring any short-term I don't want to call it FUD, but short-term stuff. Let's just call it that. That they didn't even care. Tesla was still up 1% here today, right? Meanwhile, Ford and GM were both down. GM was down 1.7%. Ford was down 1.1%, right? It just goes to show you how different the shareholder bases are. Ford and GM shareholders see this and like, oh crap. Tesla shareholders see this and like, just another short-term thing that's not going to even matter in a year from now or a few years from now. That's a view. We'll see what happens with that, but that's at least a view from different shareholder bases. It's interesting to kind of see that, okay? Uber made a massive upward move here today. 19% mover for Uber. When it comes to stock like Uber, they announced pretty respectable revenue numbers, but this is just a stock that's been heavily damaged, man. Heavily damaged. At the end of the day, it's a needs-based company. It's just going to continue to get bigger. Ride sharing, Uber Eats is going to continue to get bigger over the coming years. Business model has just kind of been in a tough space ever since Rona. And, it is due for a big upward move. And that's what you get on a day like today. And you get about a 19% move. And this is kind of what we have going on in this market now at this point in time. You get into this sort of market where as long as you don't come in with devastation and devastating news, you can get some major pops in your stock prices. And even with all the worries going on in the economy and things like that, it doesn't mean these stocks are going to continue to go down. They might not. They might make some absolutely massive upward moves like you see PayPal there, you see Uber there, right? And it's a little bit of a have and have-nots market. But when you talk about how bad some of these stocks have been beaten down, as long as they just come in with decent, like they're poised for some massive upward moves. And we've seen this story play out before in the stock market. When I was first getting the stock market at the end of 2008 and going into 2009, I watched this play out. The market bottomed in February 2009. There's still so much devastation coming in the economy over the next year or two. Still, the operating environment was trash for the next several years for companies, but the stock market just continued to move up because a lot of these stocks had already been hammered so bad. A lot of those stocks in the great financial crisis were already down 50, 60, 70%. So, it just took a little momentum, and those stocks started to rise and rise and rise. And then as the economy got better, as numbers got better over the next year or two, then we were in this situation where the run just continued and continued. And that's why the stock market many times makes these moves way before the economy makes any sort of moves, guys. And I just think that's always important to kind of keep in mind. And that's why being a long-term investor is just always the way to go, because if you're into the short-term stuff, man, you can get very caught off sides where you can get into these FOMO periods of excitement in the market, right? And then, when it looks down and out and you're like, oh, the economy is going to get worse and we're going to see more job loss and things like that. And meanwhile, you see stocks all of a sudden popping 10%, 15%, 20%, while you hear about more layoffs and this and that, right? And more worries in the economy. And you're like, what's going on here? Like, why are all these stocks moving up? Don't they look at the economic news? Remember, before the economic news got bad, the stock market was already crashing. Do people forget the NASDAQ went down like 34%, right? The list of stocks that went down 50, 60, 70, 80% is a list so long, it would take me 6 hours to go through how long that list is, right? These stocks already made this massive move because they already predicted what is happening now in the actual economy, right? Think about that for a moment. The stock market is always 2 steps ahead, okay? Speaking about 2 steps ahead, if you want to look to be 2 steps ahead in the stock market, look to join my private stock group and learn how to value a stock, know how if stocks are overvalued, undervalued, fairly valued, learn how to understand financial statements like a CPA would. If you want access to my dividend investing mastery course, my Becoming Master of the Stock Market course, my Thriving in a Recession course, all of my other courses out there. If you want to get access to the private Discord chat and know what moves I'm making in the market and everything like that, go ahead and check out pinned comment down there and go ahead and apply to join us in the private stock group. Much love as always, and have a great day.